The reason why crypto is having such a hard time in the last months is because it's competing for the same kind of investor. People that are looking for high returns and high risk, they are getting now into artificial intelligence stocks instead of into Bitcoin. Now the FET token tries to combine both worlds. Fetch.ai and Singularity.net merged together to create the Artificial Superintelligence Alliance. And so the big question is, can that alliance take advantage of this massive rally? What we see here in the background, that's the Nasdaq 100. That's the index for technology stocks in the US. Hi, my name is Gerhard. I've been in the crypto space for the last 8 years. I hit my first million 3 years ago. And in this video, I'm going to share the data points that I look at in order to outperform just buying and holding Bitcoin, for example. On average, I did this by 2% per month over the last 5 years. The data is transparent on the website. Feel free to check out the link down below. Here is my track record. Now, not every month I'm outperforming, but on average, the alpha is close to 2%. This year is my crypto portfolio measured in Bitcoin. Now, it's actually quite scary to still jump on the train of artificial intelligence, given that prices are already so high. And we have seen during the .com bubble that tech stocks can underperform by 86%. Now, this is the Nasdaq 100. So again, tech stocks relative to the US money supply. What we see over here, this correction, that was the global financial crisis. Now, the vertical line over here, that's when Bitcoin got created. So Bitcoin never really lived through a real crisis. But in the end, it does make sense long term to buy the asset that's currently dominating. Have a look at this. This is the S&P 1. So it just looks at the largest asset in all of the entire US stock market. And it compares the performance of that largest stock relative to the S&P 500. So the largest stock on average, so that used to be General Electric or ExxonMobil, now it's Nvidia, it tended to outperform on average by 7 percentage points per year. So over those 36 years, that makes a difference of almost 10x. So it does make sense to follow the crowd to a degree. And maybe we shouldn't be that scared of elevated valuations. And maybe the FET token is just the next logical play when crypto will combine with artificial intelligence to bring the next wave of growth. Now what we see over here, that's the FET price. And it seems to be moving around an equilibrium. So this dotted line over here, that's the average price over all of those years. We are currently below that equilibrium still by roughly 65%. So is that an opportunity, or is AI in the end just a bubble that's waiting to pop, very similar to .com? Now, over the last few months, I have increased my exposure gradually to artificial intelligence, and it is mainly through the integration of AI into this channel. So I'm now using AI with content production on this channel as well. You're still seeing the real Gerhard over here, but I'm now posting the content not just on YouTube, for example. I wrote this little tool that now also publishes on other platforms. And that has helped increase the reach of this channel by more than 2x. And that's over the course of a single month. On the topic of X, I now also regularly post over there. The content is little nuggets that directly come from the videos. So for example, here, the stellar token inflation, or here, the valuation of Amazon relative to other technology stocks. A few shorts are in there as well. The feedback is quite positive. The reach is also growing. So feel free to check that out if you are active on X. The account is @BitcoinStrat. Make sure you get the right account and not a fake imposter account. And so recently we saw a little bit of a hike in the Fetch.ai price again. And part of this is simply this AI crypto rotation. And part of this rally is explained by the AI crypto rotation. But then we also have the launch of a new AI agent platform. That's been announced directly on the Fetch.ai Twitter account as well. And here is that platform. It's agent-launch.ai. If you ask me, that platform very much looks like it has been coded with AI. But the focus here is clear, that investors should be getting proper returns. For example, we get this little illustration over here. Now the platform is still very much at the beginning, because when we look at the largest tokens, when we look at the largest agents by their market cap, the Grand token with 100k of market cap and only 1.5k in trading volume is at number 1. The whole idea very much reminds me of Virtual's protocol. And Virtual's protocol was able to gain quite a bit of momentum. It went from a few cents all the way up to $4.40. The hype has unfortunately died down subsequently, but we can see how the Artificial Superintelligence Alliance sees a market here again. Now, some influencers are already predicting a 36x for the FET token. I'm not sure how realistic that is, but there are many voices of people long-term accumulating the token. Now let's have a look at the actual potential upside here. Again, this is FET relative to the US dollar, but check this out. This is FET relative to the others market cap. So since launch, Fetch.ai actually underperformed the rest of the altcoin market by 97%. Where does the underperformance come from? It's token inflation. So more and more tokens hitting the market, right? Early investors, insiders, etc. They get token unlocks. They tend to sell those token unlocks. And when the supply grows faster than the demand, then we tend to see underperformance. Now, what's interesting about this chart though is that the upcoming inflation isn't that high anymore. We started off with 86 million FET, and that went all the way up to 2.2 billion. And that, of course, depresses the price quite a bit. But now, from those 2.2 billion, the upcoming inflation isn't that high anymore. And so the fundamental problem that we had with FET relative to other altcoins, that might now be close to resolved. If we actually see some adoption of the agent launch platform, then FET has a good chance to outperform, because this time around the token inflation won't be that much of a problem. The potential outperformance versus the rest of the altcoin market is 575%. Now, relative to Bitcoin, the situation looks even better, more than a 10x from here. Is this the most likely scenario? Probably not, but that's where I see the upper bound of this rally. A 10x or an 11x, that's already quite a bit to call for. A 36x, I think, is rather unrealistic, unless of course all of crypto suddenly explodes and Bitcoin hits $300,000 or $400,000. But that's then an overall macro play, not necessarily an FET token play. Here we've got the historical price chart. Compare that to the historical market cap chart. The peak for the FET token was at 5 billion. Currently we are at 600 million. So that would imply also roughly a 9x in potential upside. Very similar to our bull case when we compare the token to Bitcoin. Now, everybody can look at price charts. Some people also look at relative valuation charts, but very few people actually have a look at what's happening on chain. So how many people are actually holding FET long term, and what's driving the price? Is this short-term speculation with perpetual futures, with leverage, or is this accumulation on chain? Let's have a look. So we've got a token on Ethereum with 162,000 holders. We've got another token on the Binance Smart Chain with 50,000 holders. This is the Ethereum-based stats. So on the left side, we've got the number of wallets with at least 4,000 FET tokens. It's roughly $1,000 worth of the token. In the middle, we go a 10x from that, so that's $10,000. On the right, it's $100,000. We can see how the number of retail investors tends to grow over time. The same is true for the medium-sized retail investor. We can see, however, how the whales, they did have quite a bit of a sell and divesting event happening at the end of last year. We can also see how the growth rate, even for the retail investor, tended to slow down at the beginning of 2025. Let's have a look at the levered bets. So on the spot market, we had 54 million worth of trading volume in the last 24 hours. On the perpetual futures market, that was 151 million. Now that's 3 times the trading volume. That's actually not that much, given that perpetual futures have much smaller transaction fees than spot. So there seems to be a spot-driven price discovery. Let's have a look at the details. This is the open interest. It's not necessarily that high, right? It's only above 100 million. There is correlation between open interest and the price. So open interest is simply the amounts of bets that are currently been made on the price. When this continues to go up, when this doubles, then this will of course also help the Fetch.ai price. Now a 10x, right, the bull case for Fetch.ai or for the Artificial Superintelligence Alliance, it's not going to happen just through leverage. We need to get long-term spot holders. And those spot holders probably have to be incentivized to hold the token, maybe by using the agent launch platform. But right now we can at least state that the attention on the token is not too high. The trading volume on the perps is also rather low. And that is a good thing. We want to buy when attention is low. We want to sell when attention is high, or when trading volume is high in this case. I've also run a backtest using the backtesting platform of this channel, right? So that's Bitcoin Strategy Analytics. We look at the best golden and dev crosses. That's now 40,000 simulations of buying and selling. We look at two moving averages, a slow one and a fast one. We look at the best combination. That's a 17-day and the 39-day simple moving average. How much better did this perform compared to buying and holding? The answer is the alpha is at around 170% per annum. That's how that looks like over time. So at the bottom, we've got the portfolio measured in FET. So I like this trading strategy a lot. It tends to have outperformance almost every single year. And we are just looking at the crossing of two moving averages, right? That's the power of data. Where are we currently? The answer is we have just gotten our golden cross. So this is very bullish. Now, of course, not every trading signal here makes money. In fact, the win rate is even below 50%. It's only 48%. But the winners tend to be much larger than the losers. And that's why following the trend, using golden crosses and dev crosses historically worked so well for the FET token. So again, that's a 17-day simple moving average and the 39-day. We want to buy when the shorter term moving average crosses the longer term moving average to the upside, and we want to sell when there is a dev cross, the shorter term goes below the longer term. And this did work incredibly well for Fetch.ai over time. That's actually the main approach that I personally use in order to outperform the market. When I talked about those 2% per month over buying and holding Bitcoin, that was through back-tested strategies. So I don't re-evaluate the market every day. Instead, I spend the time to find trading rules that historically worked very well for a particular altcoin. I started publishing my trades in real time 2 years ago. This is my track record. And on average, a trade made 5.2%. The number of winners and losers is very similar. My win rate is also just close to 50%. But again, because the winners are larger than the losers, I tend to make money over time. I'm not showing the current open positions, but here is the track record. And all of those trades can be 100% verified. For example, let's have a look at this here, right? When I shorted the Trump token, we can just look at this date stamp over here and this one over here, open dedicated messages, and then we've got the opening of that particular short. So I was betting on the Trump token going down relative to Solana on the 4th of August 2025. And then subsequently, when did I close that position? That was over here on the 25th of August, when Trump sold off quite a bit relative to Solana. So I like to make those relative valuation trades. I always want to cancel out the general macro, right? If Bitcoin goes up, most altcoins go up. When Bitcoin goes down, most altcoins go down. But the individual movement of a particular altcoin relative to the rest of the market, this is where normally the patterns emerge. And that's where we see, for example, this very constant underperformance, in this case, of Trump compared to Solana. And so this is just one of many different trades. All of them can be 100% verified with their gains, their losses, with that attached chart as well. And I'm sharing all of those, of course, in real time for the premium members of this channel. If you don't want to manually copy trade, but you just want to automatically follow my trades, that's reserved for the premium members on an annual membership. Last year, we achieved 44% annualized. This year, we target the same. There is a deposit tax of 2.5%, and there's also a profit share of 10%. So if you make another 44%, 4.4% of that will go as a profit share to me. I try to be as transparent as possible. I don't see anybody else on YouTube doing this actually. Maybe because they are not winning traders, or maybe because they're afraid of the potential scrutiny that not every single trade is profitable. But in the end, again, it's the long term that matters. And it's important to get a realistic picture of trading performance. That not every single trade makes money, and that it's the long term and the determination of probabilities and statistics that matter. So that also the expectations are rightly set, right? If you bet on a trade, you're not going to double and triple your money all the time. But when I first ran the numbers a month ago, I was actually pleasantly surprised by having more than 5% for trades that on average are being held less than a month. So feel free to check it out. It's currently $125 per month. If you join yearly, you also save some money. That's when you want to enter the automatic copy trading. But you can start off with monthly and then switch to annual after you've made your first gains. And so for now, just to summarize, if we look at all of the different trading approaches, the 17 versus 39-day simple moving average worked the best for Fetch.ai. The outperformance of that strategy over time is undeniable, and we have just gotten a golden cross. Make sure to follow those two moving averages though, be this on the live chart directly here on the platform or be this in your trading view, that when momentum turns around that you're not part of the potential sell-off, because momentum in the FET token tends to switch quite significantly. And you don't want to be in when FET goes down by 98% over there or by 95% over there, or recently by another 95%. The volatility is brutal. You definitely do want to trade this token actively. This is not something to just buy and hold and completely set and forget long term. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you on Premium. Link to Premium pops up here on the screen. Thanks for watching. See you next time. Cheers.